Okay, this is Kevin. We're back talking about KeyTools day trade. Today we're going to go over, this is for video number 3, and we're going to go over, let's see if I can get this up here for you. It's that, there we go. Okay, now for video number 3, this is going to be a quicker video because it's going to be just an overview of the 3 strategies so that you understand what they're talking about, and then I'll make smaller videos for one for each strategy. Okay, all right, let's move forward here and see, what are we talking about. Okay, the 3 standard strategies. They are, first, the FNW orb one. That's the one that I was telling you about that has the fucking what you trade. Orb is opening range breakout, and FNWU is my term. It starts with fuck. It stands for fucking with you. So what happens is, with the ATR 14, which is the average trading range, what happens is you can tell when it's a liquidity push, because what they do when they're, this is when they're, earlier we talked about how the people with a lot of money will push the retail guys, little people like us, out by triggering your stop loss, taking your seat, and then letting the market do what they want it to do, or what it's going to do. So that's what this number 1 is. Now, ATR, though, how do you tell when it's a liquidity push? The way you can tell is the average trading range 14. What that is over the last 14 days, how much has a stock moved? If it's a, let's say, a $10 stock, and it's moved up $2 and it's moved down $2. Okay, its average trading range is 4. Okay, so it's traded in the range of 4. Okay, now if in the first 15 minutes of the day, that $10 stock moves between 25 and 39%, I believe that is a liquidity push. It shouldn't move that much that fast. If it does move that much that fast, more than likely what's happening is the folks are trying to push you out. Now, why are they pushing the retail people out? Why are they that greedy? Why are they, because what they can't do is, let's say when they're trying to buy thousands of shares, if they buy them all at once, the price is going to go up, so they're going to have to pay more for it. They don't want to have to pay more for it, so they got to get you to stop out so that your buy becomes available. It becomes liquid. You're stopped out. You're no longer in that trade. You're gone. So now they can come in. They've created liquidity in the market. They've created an area where stuff can be bought at the same price. So if they don't get enough, they'll push it down again, get some more stop losses to trigger. Once it triggers out, then they'll buy it. So they're trying to steadily buy at the same price. Sometimes you'll see it come up to a certain level and it'll just stop and it'll bounce off of it and go back. It'll bounce off and go back. That's because some whale is sitting right there buying up everything as soon as it hits that spot, and then they're gone. Okay, so that's how that works. But the bottom line is, with this particular trade, what's happening is, if it moves too much in that first 15 minutes, then it's definitely a liquidity push. Now, if it continues to move, what I found is, if it moves beyond that 39% or beyond 40%, it's actually a real move. It's not a fake. It's not something that you would fade, because what happens is if they fake it, let's say the stock is sitting right here, they do their little treachery and the thing drops down, it's going to go back up if it's gone down between 25 and 39% of the ATR. Okay? If that $4 on that $10, if it's moved that much, it's going to go back up. So what do? You fade the stop. In other words, what you do is you buy a call. It drops down like that, forget them, buy one. What it's going to do is go back up, and you're going to ride right with them to go back up. That's if it goes down within that range. Now, if it goes down and continues down, that's a real move. That's what I call a dual play. That's what you're seeing here. If it goes down that much, then it's probably a real move. Some they've had, if it's gone down, they've probably got some really bad news and it's really a real move. It's not a liquidity push where they're trying to fake you out and get your spot. It's actually falling. So you have to kind of look at it and see what it's going to. That's why I say it's a dual play. You could fade it and you could play it as though it's going to continue going down. I usually jump out of this one if I jump into that one. So they're not playing against you. You're not saying it's going to go up and continue down. You kind of play them both that way. So that's what this trade is. The SPY scalp 0 DTE. 0 DTE means the last trading day. Now, when you buy an option, it has a time limit on it. It's like if you bought you can buy an option for 6 months out, and then it'll sit there for 6 months. But if whatever you want to have happen happens within that time, then you can sell it. But I'm not doing that. What I'm doing is day trading. I want moves. I want to see moves right now. 0 DTE means there is 0 number of days left until this expires. So in the morning, it's going to be worth something. At the end of the day, it's not going to be worth anything. If I just held it all day, it wouldn't be worth anything, because at the end of the day, there's no more time left to trade it. That's called, theta decay, but don't worry about Greeks and, gamma and delta and all that stuff right now. It's important, but for what we're talking about right now, it's not as important as knowing that when you're doing 0 DTE, you want to get in and you want to get out. You don't want to hold it, because if you just hold it for an hour, let's say the stock is just going sideways. If it's not going up or down, it's just going sideways, you're losing money because the time, it's getting closer to its expiration. If I have 6 months to wait, it's going to be worth more. If I have 6 months of time left, it's going to be worth more than if I have 6 hours left for it to be worth something, and then it expires. Okay? So that's what the 0 DT scalp is. Now, I'll show you on the screen that it says the 5 gates must be green in order for that to work. And then the Bollinger Squeeze. Now, I don't know if I'm saying that right. It's either Bollinger or Bollinger, with whatever. It's spelled correctly. Just go with it. Okay. What this is if a stock is going up and down, it's trading within a range, then it gets to where it's doing this. It's just kind of consolidating. It's moving just a little bit within a range. What happens there is like a ketchup package. It's like if you set a ketchup package on the ground and you stepped on it, you don't know if it's going to go up or it's going to go down, but it's going to go somewhere. So what happens, once a stock consolidates like that and it gets into a squeeze, normally what it does is it breaks out. It either shoots up or it shoots down. So you just want to know when something is in a squeeze so that you can watch it. Now, what I normally do is I look at it and say, okay, remember we were talking about VWAP. If the stock is doing, this consolidation thing, below the VWAP line, I think it's going to go down. If it's doing this consolidation thing above VWAP, I think it's going to go up. I'm going to put in my order to follow that thinking. And if it does one or does the other, you know, if I get it wrong, I lose 25%. If I win, I get 50%. On that trade, all I got to do is be right 30% of the time to break even. So we'll do the math later. Okay, let's take a look at this. So let's move on to the next slide here. And momentum watch. Okay, on the application, there's also a thing called momentum watch. And what I'm doing is I put in my own, I found that these stocks that do this become interesting. So if it's a stock that has moved more than 5% within this day, and it only has a certain amount of shares available, the volume of the move is greater than 5 times what it normally is, and the price is between $1 and $20. This is taking a lot of stuff from some other people who do a lot of trading out there. I think his name is Russ something or other, but my numbers are a little different from his, but this is kind of what he does, and he makes a lot of money. So this is a momentum watch trade. Now, what I also found that is interesting is that same stock, that if it shows up as a momentum watch item, I also like to watch it for later in the day turning into a Bollinger squeeze. If it turns into a squeeze, it's usually got some really interesting activity. Okay, so those are ones that I watch, and you'll see in the application on the Bollinger squeeze in the universe for the squeeze. And a universe is all of the stocks that are related to what you're talking about. Okay, I'll show you in the actual application what that is when we get to that. But the momentum squeeze, what I do is I take my momentum watch items and I add them into, keep watching these for a Bollinger squeeze. If they go into a squeeze, then, you know, ding, ding, let me know so I can go ahead and trade those. Okay, let's keep going here. And let's see, what do we got? Pre-market. This slide is a little, I'm going to have to show you on the application when we get there. It's a little rough to read, but the bottom line is the pre-market prep. We already talked about these 8 checklists, but there's an expandable area right below it that these become very important. So let me show you that just real quick if I can, and then we'll dig into it when we get there. This area in the pre-market check, we do all of these 8 checks. After those checks are done, down here, if it turns green, everything is aligned, and it means this stuff down here, we'll go over it. You know, I know I keep saying we'll go over it, but this is not a lot compared to what this page is doing for you. So work with me on this. Okay, I'll come back and tell you what that is in the actual trade when we go into today's setup. Okay, and let's see, let's flip back over to here. All right, and let's keep going. What do we have after that? And that's going to be it for this one. Next, we're going to dig directly into the FNWU orb trading. We'll talk about that, and then we'll dig into the other ones and talk about those specifically. Okay. Alrighty. Have a good one, y'all. Take it easy.